Good morning, I'm Peter Milios from the Finance News Network. The S&P 500 suffered its worst weekly decline since March 2023 on Friday, as investors grappled with a weaker than expected August jobs report and shed leading tech stocks. The broad index slid 1.73%, while the Nasdaq Composite shed 2.55%. The tech-heavy index ended the session more than 10% off its record close. The Dow Jones Industrial Average fell 410.34 points, or 1.01%. Turning to the US sectors, all closed lower overnight except for real estate, which closed higher by just 0.01%. Communications was the worst performer, closing lower by 2.9%. Mega-cap tech stocks took a significant hit as investors dumped risk assets amidst rising worries about the US economy. The New York Stock Exchange FANG Plus Index, tracking major tech stocks, dropped 4.2%, whilst the Philadelphia Semiconductor Index fell 4.5%. Amazon declined 3.7%, Alphabet slumped 4%, and Meta Platforms lost more than 3%. Broadcom shed 10% on lackluster current quarter guidance, pulling down other semiconductor names like Nvidia and Advanced Micro Devices, which both dropped about 4%. Friday's moves capped a turbulent week for equity markets. The S&P 500 registered a 4.3% decline, the Nasdaq shed 5.8%, and the Dow Jones Industrial Average slumped 2.9%. The August jobs report added to concerns of a slowing labour market. Weak economic data has rattled markets and dampened risk appetite in recent weeks. Non-farm payrolls grew by 142,000, below the expected 161,000, while the economic rate ticked down 4.2%, in line with expectations. Investors widely anticipate the Fed to cut rates by at least a quarter percentage point at its upcoming policy meeting. But softening labour market trends have increased bets on a larger rate cut. Traders are divided on whether the Fed will cut by a quarter or half percentage point, according to the CME Group Fed Watch tool. Thank you for listening.